Hi everybody, this is Gary doing Sentiment Timing, and this is our free market video report for Wednesday, June 29th, 2016. So I hope you guys are having a fun time here. This market's been going absolutely haywire, and it was one of those things that I did warn about the whole Brexit thing, where the charts were looking like they were going to head lower, and you just wanted to use any strength to build a short position. And I don't really understand what they were measuring with the risk reward on that, because you have if Britain would have said that they were staying, Friday would have been the exact same as Thursday. Nothing had changed, but the biggest risk on it was if they decided to leave, which had happened, and nobody was really placing any kind of risk bets in place, and that's why we saw the huge drop. So we did warn of the bounce coming, and that was we had some pretty low sentiment readings on Friday and on Monday, and we saw some bullish divergences on the 15-minute charts. So it was one of those things where we were saying I wasn't really interested in going long, but it was one of those things that you wanted to manage your short positions, because you made 110 points in 2 days. So you turn around and you take some off, and you wait for the bounce like we've always gotten, and we're getting right now, and you re-short it again. So let's get started. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that's what creates market opportunities. We do that through Woody Dorsey's sentiment data, his technical timing indicators that predict when the markets are going to reverse, and then we combine that with just regular technical analysis. Now, can the stock market be predicted? You're going to hear from a lot of people, a lot of the gurus, that it can't, and really the main reason why they say it can't be predicted is they don't really understand the psychology of the market. And Woody Dorsey's been doing it for over 40 years. He knows these patterns, these cycles repeat over and over. And the minute that we see, the herd jumping either all bullish or bearish, it's time to start looking for the other side of the trade, because the herd is always going to be wrong. So can the markets be predicted? On 9/9, he had said look for a move that would happen on 9/18. You can see what took place there. We had a huge drop. This is just another one. This is on February 26th. He was looking for weakness into March 5th, into the 11th, and then from there we were going to get a big rally. The low hit on there. So the reason why I'm showing you that is, the market can be predicted, and a lot of, sentiment is the missing link on things. And there's there's only a handful of people that track investor sentiment and chart it. And there's even less people that actually know what to make of that actual data, and that's, like I said, Woody's been doing that for over 40 years. So let's bring you into some stuff that can help you out as far as trading wise. Now this went out yesterday. This went out today. I'm sorry, it was just in an update that we had a 90% bullish reading here, and that's after we had back-to-back 1% readings and 3% bullish. So everybody was bearish at the lows, and that's the mistake that everybody makes. Everyone gets too bullish at the tops and too bearish at the lows. And all you have to do is switch your thinking, and when it's up there and you start seeing big sentiment extreme sentiment readings there, and technicals are looking down, you just take any kind of strength that they give you, and you layer in a short position. That's all it is. You just let everything just play out. You don't have to worry about it, because you know that there's only a limited amount of time that this market can go up when everybody's on the same side of the trade. So can the stock market be predicted? Woody has predicted the last 3 market crashes. They have tallied over 700 S&P points, and that's just through September 2014. And like I've been saying, there is another black hole crash that is coming this summer. And the question that you want to, you want to be, do you want to be next to the person that's predicted the last three? It's going to be one of those things that if you don't know when this is actually happening, it's going to be the scariest time of your life. I mean, just think about the last 3 times we've had these crashes, 4 times. It's not fun, and unless you can position your portfolios properly, you're going to hate the markets, and you're going to probably let your emotions take over and make stupid trading decisions that are going to be dead wrong. And instead, when you know when these markets are going to be reversing, you just position your portfolio. And even if it's wrong, it's not going to be wrong for that long. So, the choice is yours. If you want to position yourself for the upcoming crash, I would, I'd definitely be looking to subscribe. But what I want to do, I want to go over just our regular charts here. And you can see that on the 60-minute chart here, we did not have any bullish divergences. So I had to leave the door open that we were going to make another low. And we may still. I think it's going to get really choppy there. But what happens is we're running right into some resistance at the 2083. If it pops above that, hey, maybe we start closing some gaps. But the one thing is that the bulls left another series of gaps like they always do, and most likely they're going to be closed. But even whether they're going to be closed or not, the main thing is that these rallies are just shorting opportunities. That's all it is. So you pick your spots where you want to layer in your short position, and just let gravity do its course. And then when it's down here, you can pick your spot to go along when sentiment is extreme bearish. So we didn't have any bullish divergences, but we were pretty oversold. So we got the bounce, and out of the bounce, I think we are up 75 points, and 49 or 50 of those points are done when the markets were sleeping like they always do. But this is the resistance area you want to keep an eye on. What the bears need to do is really get it back under the 2050 level. If they do that, then we should have a reaction trade down to the 2025. Taking a look at the 15-minute chart, this was when I was saying that there were some bullish divergences that were in place, and we did get the nice bump on it. Now we're actually seeing some bearish divergences, so keep an eye on the 2087 and watch sentiment, see what it's doing. If we have another big up day tomorrow, it's going to be the 3rd extreme sentiment day. Be a little bit careful on that. And again, like I said, we have there's another black hole crash that is pending, and you just saw what that was an actual just kind of a brief preview of what we are going to be seeing, and that was on Friday and Monday. So if you were positioned accordingly, you made a fortune, but that's not even the actual crash that we're talking about. Now, I'm also going to be giving the free Markets Path membership. That's what I do. I do the nightly video reports kind of like this. I do morning notes and send out what trades I'm making, and we also have a trade room. So as long as you stay a member of Sentiment Timing, you stay a member of Markets Path, and I charge $80 a month, so it's almost $1,000 deal. So with that, until next week, have a great night.